Of the three pieces, political, technological, and pharmaceutical, I would say that pharmaceutical is the most powerful of the three. But it was the coming together of those three interest groups that pillaged the world. Between 25 and 40% of all existing wealth was stolen over 5 years, and our lives disrupted, our communities wrecked, and our demographics utterly scrambled. I don't know, do you stay and fight or do you flee? That's a great question everybody's asking ourselves. And the fact is that you're not even safe in Florida. If everything falls apart, if we experience a second wave of inflation, which we might, not even Florida is going to be safe.
You're watching Silver News Daily. Subscribe for more.
They're not going to announce it. You'll never see the headline, 40% of the world's wealth has been stolen. But make no mistake, it's already gone. Vanished. Not in a stock market crash, not in a banking collapse, but through the most sophisticated theft in modern history, currency debasement. From 2020 to 2025, a global economic heist unfolded in plain sight. Politicians blamed the pandemic, central bankers called it stimulus, and tech billionaires cashed out at the top. But while the world was distracted, your purchasing power was gutted, your savings were hollowed out, and your future was quietly auctioned off. What's more terrifying is that this wasn't an accident. It was engineered. A perfect storm orchestrated by pharmaceutical giants, surveillance tech, and political elites, each playing their role in the greatest wealth transfer ever seen. Now, as inflation threatens to surge again and global debt spirals out of control, the elites are circling for the final plunder. But here's the part they don't want you to understand. Silver might be the one thing standing in their way. Not crypto, not cash, not stocks. Silver. This isn't a game anymore. This is your financial survival. Because when the second wave hits, and make no mistake, it's already building, there won't be time to react. You'll either already be protected or you'll be left behind. So what exactly happened to all that wealth? Who took it? And why is silver the only safe haven left? Stay with me.
I think what people need to understand is we're looking at a perfect storm right now, because we have a housing bubble that makes 2008 look like just nothing, just a foreshadowing. Really, the house price inflation over the last 5 years has been unspeakable. I mean, in some places, just an outright doubling. Where I live, it's been an easy to say it's been a doubling in 5 years. So that tempts governments to just keep going up and up and up on their valuations. At the very same time, people are less and less willing to use the public schools because of all the scandals that emerged out of the COVID period. Some were shut down. Some schools were shut down 1.5 years, 2 years. People still had to pay for them. How about that, right? I mean, you're paying property taxes to fund schools, but then schools are closed, and nobody's offering you a rebate. So so after all that happened, then people had to pay a second tuition to private schools or having to homeschool. This is unsustainable. Meanwhile, the parasitical governments are coming after you more and more and more with little pieces of paper that drop in your mailbox. Oh, guess what? Your property taxes are double. And in the area where I live, it's not unusual for people to pay, $20,000, $30,000, $40,000, $50,000 a year and property tax. I mean, it's like, and this is just like throwing money into a trash can and lighting it on fire.
From 2020 to 2025, global wealth wasn't lost. It was extracted. Quietly. Systematically. And most people still have no idea it even happened. The mechanism wasn't guns or banks. It was inflation. Currency debasement. A slow, invisible drain on your purchasing power that left your dollars weaker, your wages worth less, and your savings decimated. In Western economies, cumulative inflation averaged between 25% and 35%. And in some areas, even higher. That's not just a number. That's your rent, your food, your energy bills skyrocketing while your income stayed flat. You didn't consent to it, you didn't vote for it, but you paid for it. The trigger? Pandemic-era stimulus that exploded the money supply. The U.S. alone saw M2 grow over 40% at its peak, fueling asset bubbles, speculative frenzies, and an artificial boom that only benefited the top 1%. But beneath that surface surge was a brutal reality. Real wealth was being siphoned away from the middle class and funneled into the hands of those closest to the money printers. It was theft by dilution. The more dollars they created, the less every existing dollar was worth. And while Wall Street partied, Main Street bled. And here's where it gets even more sinister. Because while your cash was eroding in value, the very system responsible for the theft was convincing you that everything was under control. Inflation is transitory. Stimulus is necessary. Recovery is underway. Lies repeated so often they started to feel like truth. But look around. Ask yourself, if the economy's doing fine, why are people struggling harder than ever just to afford the basics? Why is wealth inequality at record highs? Why are assets out of reach for an entire generation? Because this wasn't a mistake. It was a transfer, a deliberate siphoning of wealth from those who earn to those who issue. And the damage is already done. The only question now is, how do you escape a game that's rigged against you from the start?
We use this word own, but it doesn't have any meaning anymore. For one thing, mortgages used to be, well, I don't have the money, so I'll borrow from the bank for 5-7 years. And anybody who did that was taking on a real risk. So, well, are you sure you should be borrowing? America, in its long history, they've always been a thrifty people, and bankers have had a hard time persuading people to go into debt and say, well, okay, maybe I'll do it. But over 100 years, it became absurd to the point that we have these 30-year mortgages, and people say, well, I'm going to buy a house. Well, you're not going to buy a house. The bank's going to buy the house, and you're going to pay the bank back. So, you're going to buy a $500,000 property, you're going to pay more than $1 million for it. Okay. Once you look at all the interest and everything associated with that. So, and you're not going to own it really for 30 years. Okay. So there's already that problem. I can't stand it. My own view is, people probably should rent until they can pay cash. Actually, they should, pay cash. But even if you own your home outright, you have to pay rent to the government. That's, like basically presumes the right to own it. If you stop paying, like say, it's going to be taken from you. So you live 30 years with the idea that, the bank owns your house. And now the bank says, okay, now you're the owner of the house. So now you've got somebody new to pay. Now you have to pay the government, and what, basically rent? I mean, why is the government presuming to own what you own? I mean, it's terrible. Like, I don't think you can ever really have fundamental American style ownership until there's no taxes, or property taxes at all. And I think this is where we're headed. I mean, Florida hasn't done it yet. The legislature has experimented with the idea. It still has to pass. I think it will. But eventually everybody's going to have to adopt this. I mean, there's no rationale left for the property tax. It doesn't make any sense. It's contrary to the idea of freedom. And it doesn't even work from a utilitarian point of view anymore because the schools have broken down, having been destroyed by COVID lockdowns. And now school choice. So it doesn't make any sense. There are communities in this country that live and breathe on the existence of property taxes, commercial property taxes and residential property taxes, without which they would be in worse economic condition than they are today. And this is sad. I don't know what the way out is, because it just so happens in the communities for whom that's true, they also have massive problems with crime, terrible schools, falling apart infrastructure, puddles all over the roads, bridges that are weakening, terrible public services. Meanwhile, very high property taxes.
It didn't happen in secret boardrooms or through backdoor deals. It happened in the open, disguised as progress. The pharmaceutical giants pushed mass compliance. The tech empires harvested every click, every search, every fear. And the politicians? They wrote the checks, signed the mandates, and flooded the economy with trillions in freshly minted currency. This wasn't chaos, it was coordination, a triangle of influence that operated under the cover of crisis, using fear to consolidate control and engineer the most aggressive wealth transfer in modern history. Start with pharma. They didn't just sell vaccines, they sold obedience. Billions in profits were secured while citizens were locked down, coerced, and gaslit into submission. Every restriction became a tool of control. Every promise of normal dangled like bait while trillions flowed to the top. But it wasn't just the health emergency, it was the data. The tech firms capitalized on a digitized world to monetize every habit, behavior, and biometric signal. Surveillance became the business model. And as wealth was being stolen through inflation, your attention was hijacked by algorithms designed not to inform, but to pacify. And while the public was fixated on viruses and social justice hashtags, political elites executed the real heist. Stimulus checks kept people quiet. Liquidity injections pumped up the markets. But none of it was free. The cost was hidden. In soaring rents, inflated food prices, shrinking wages, and broken supply chains. The same leaders who claimed to save the economy were, in reality, auctioning off the future for short-term power. This unholy alliance of pharma, tech, and politics didn't just accelerate inequality. It rewrote the rules of the game. And unless you understand how deeply embedded this triangle has become in the structure of global finance, you won't see the trap being laid right now. Because the same forces that engineered the first theft are positioning themselves for the second. And this time, the target isn't just your money, it's your ability to resist.
It was really the movement in Florida to get rid of property taxes. They're doing so well from a revenue point of view. And of course, Florida doesn't have its own central bank, so it has to balance the budget. But they have an excellent governor who's done a great job. And they're at the point now that the property taxes don't make much sense. And even from a fiscal point of view, they're just not necessary. Property taxes in the U.S. have always been tied to public schools, which came about in sort of the 1880s, 1890s, and as a way for the community to fund its educational programs, seen as a public good. So we all pay for the schools zoned within a certain area. So all property owners have an interest in educating the next generation of children, whether they have one kid, no kids, or 10, right? So that was the idea of the property tax. But Florida began experimenting with school choice some years ago, so that the zones, school zones, and the tie between property taxes and educational institutions within those zones has begun to break down. And so they make ever less sense from that point of view. They're hard to justify. And once you stop thinking of property taxes as sort of a community, a tuition that the community pays, then it just becomes just a straight up tax, and it's a tax on property, and it's particularly egregious that you have to pay it. As almost as if you're renting your property from government, and then every time the tax assessor comes along and says, "Oh, your property has gone up in value, now you owe more tax." We've not done anything because the home's fully paid off. You're just sleeping, living there, cooking there, and now you're having to pay more and more and more and more rent to the government. This flies in the face of anything remotely resembling property rights or American values. So, as the public schools have begun to break down, the traditional method of financing public schools has begun to break down, and the public schools themselves, you're starting to see pressure against property taxes, and people are starting to express real outrage for what they imply about.
Just before we get going, we just launched the official Silver News Daily Telegram. To kick things off, we're running a 10-ounce silver giveaway. Yes, real physical silver, not a voucher, not digital credits, actual bullion. This Telegram will be our new home for real-time silver discussions, market insights, collection picks, and everything precious metals. It's where the community truly comes alive. Here's how to enter the 10-ounce silver giveaway. Be subscribed to Silver News Daily on YouTube. Turn on the notification bell. Comment 10-ounce giveaway on 3 separate videos. Be an active member of the Telegram group and say hi. Once we hit 500 active Telegram members, we'll pick one lucky winner to receive 10 ounces of silver shipped directly to you. So get in early, stay active.
If you want to see where the next financial shock will strike, look no further than Florida, a sun-drenched warning sign for the entire nation. On paper, inflation has cooled. The CPI sits at a manageable 2.4% nationwide. But the numbers lie. Beneath the surface, core inflation remains dangerously sticky at 3.3%, and in regions like Florida, where tourism, housing, and consumer spending dominate, the pressure is building fast. Rent inflation is still rising. Insurance premiums have doubled, and with fiscal deficits now soaring past 6% of GDP, the real storm hasn't even hit yet. The threat? A second wave of inflation, one the Fed may no longer have the tools to contain. After aggressively cutting rates earlier this year, central bankers are now stuck. Inflation isn't dropping further, yet raising rates risks triggering a recession. Meanwhile, the White House is preparing new tariff implementations that could slam into consumer prices as early as the first quarter of 2026, potentially adding another 1 to 2 percentage points to headline inflation. This isn't a hypothetical. It's the fuse that could light the next explosion. Florida's economy is especially exposed. With high migration inflows, booming construction, and fragile supply chains, it's a powder keg waiting for a spark. And when inflation reignites in regions like this, it doesn't just stay local. It spills over, affecting national sentiment, political discourse, and, most critically, investor psychology. Once the public realizes inflation is making a comeback, the rush into hard assets begins. But by then, it'll already be too late. That second wave won't come with a warning bell. It'll arrive like a riptide. And just like in the last round, those holding cash or stocks will be left scrambling, while those who positioned early into real assets, like silver, will be the ones standing above the chaos. Because in a system that lies about the present and hides the past, only those who prepare for the future stand a chance.
From the signing of the Declaration, and not even from the passage of the ratification of the Constitution, really, or any period in colonial history. It's only from the presentation of this the book of political philosophy, or this Declaration of Political Philosophy, which had these strange words that had never really been. They had languished in John Locke's Second Treatise on Government, which written maybe, 50 years earlier, something like that. And Thomas Jefferson took them and said, the following truth. So, we've already got a declaration that something is true. It's self-evident, so that's a moral intuitionism. We know it in our bones, that all men are created equal and have rights to right the right to life, liberty, and the pursuit of happiness, which is a very beautiful phrase. And the fact that we can say those words now, and we think that that's just who we are, that's what we believe, and that's what we aspire to, is kind of crazy, because in 1776, that was a radical philosophy of unspeakable sorts. I mean, it's flew in face of world institutions, from monarchies, dictatorships, ecclesiastical governments, and even the problem of slavery in the U.S. was directly addressed by that. And Thomas Jefferson himself was an abolitionist, and he was suspected of being an abolitionist. And the founders signed off on what was essentially an abolitionist document, despite the persistence of the slave trade, even in those days. So what an amazing thing that they even agreed to this. And Jefferson himself was an unusual figure. I mean, he was a philosopher and an architect, but then also just a farmer, The closest thing that America had to an aristocracy, but it was an unusual aristocracy because it was a working aristocracy. I mean, he was a genuine farmer. He was like obsessed with farming, and a lot of his writings are about prices of agricultural goods and farming techniques and that sort of thing. So he was a real practitioner of liberty in addition to being a theorist of it. So in that sense, he represented the best that America had to offer. In contrast to European royalty, they prided themselves in never working a day in their lives.
Silver isn't just protection, it's rebellion. In a world where currencies are printed into oblivion, where inflation eats away at the middle class, and where digital control is tightening its grip, silver stands alone as one of the last honest assets. It's not controlled by central banks. It's not subject to political manipulation. It can't be erased with a keystroke or frozen with the flick of a bureaucrat's wrist. And that's exactly why the elites fear it. When you hold silver, you're holding something real, something with intrinsic value, forged by nature and used by civilization for over 5,000 years. It's money outside the system. It's wealth that can't be diluted, censored, or tracked. And right now, as inflation simmers and debt spirals, that role is more critical than ever. While gold gets the headlines, silver is the stealth operator. More volatile, yes, but also more explosive when the system buckles. And here's why. Silver doesn't just hedge against inflation, it thrives on chaos. In 2025 alone, silver investment demand rose 15% in bars and coins, real physical silver, not paper contracts. That's not a trend, that's a warning. Institutions are loading up. ETFs are seeing record inflows. Physical premiums are jumping as COMEX inventories dwindle. Why? Because investors see what's coming. They know the next shock will test the very foundations of the financial system, and when that happens, silver's dual nature, as both monetary refuge and industrial workhorse, becomes an unstoppable force. And let's not forget the volatility. Silver doesn't move in inches, it moves in leaps. When inflation expectations spike, silver doesn't walk, it runs. When trust in fiat dies, silver doesn't protect, it launches. That's what makes it dangerous to the system. That's what makes it essential to you. Because in the final phase of this war on wealth, silver isn't just a hedge, it's your last shot at sovereignty.
That's good to be here. My latest book is called Spirits of America, actually. It's an unusual book. It's not about finance or philosophy or anything else. It's about, I guess, what you call like values, historic values in America. And the reason I wrote it was to celebrate 250th anniversary of the founding, which we date from the Declaration of Independence. And so it was broken down into 15 chapters, and it explores one or another American habit, value, moray. Well, I mean, this is gaslighting to the ultimate extent, and the censorship began right away. It actually coincided exactly with the lockdowns. There's some precedent for it before, but mostly the universal censorship hit with the lockdowns, because so you couldn't find out the truth. So you're being, held at home, only allowed to go out with a mask. And some places, 5 large cities in the U.S. were segregated by vaccine status. Our communities were shattered, networks torn apart, families separated. We had trillions of dollars dumped on us and invited to buy all sorts of new gadgetry, and then we get out of this period, and then suddenly we get dumped on us. AI. Don't worry. Here's your new friend. Here's your new artificial friend. Let's use your cool new toys to talk to your new friends. The inflation adjustments have been a mess. I mean, they've ruined all of our economic data. We don't know what retail sales are anymore. We don't even know what the inflation rates are. But even if you're accepting regular inflation rates as reported by governments around the world, let's just say they're off by 5-10%, something like that. But the world as a whole took a haircut of anywhere between 25 and 40% over 5 years. The entire world, with the exception of the Far East. With the exception of China has data, I don't believe, but there are other Far Eastern countries that kept their money stable during the COVID period, but the rest of them inflated. So the entire world was pillaged for at least a quarter of their wealth. The entire world, Latin America, Western world, took a 25% to 40% haircut during that period. That was just between 2020 and 2025. That was a transfer out of savings to levered up governments, out of the middle class and poor to the well-connected industries and the rich. That's what it was. Now, you could say it was an accident. I don't believe that. I think it was all intentional. They did it under the cover of crisis to benefit the two most powerful industries in the world, namely digital technology and pharmaceutical companies. And they pillaged the world. They looted the world. It was one of the it was possibly the greatest conspiracy in the history of man. It has unfolded before our eyes over 5 years. That's brownstone.org, and it's a large community now. It's a global community of thinkers, writers, intellectuals, scientists, who are spending all their time thinking about these problems, and I benefit from my exposure with them every single day. We support some of the best writers around, and our influence has been, I would say, very far-reaching at this point, but not far enough. Yeah, it's a good start. I mean, you have these little pockets out there where they're trying new experiments in freedom, and Florida is one of them, and God bless them for that. And I know everybody kind of wants to move there. I kind of do, but I don't know. I think everybody's dealing with this right now. Do I really want to leave my heritage, where I'm most happy, my home, to go live in this other place? And then what happens to the place I've left? I mean, if everybody has that, but New England's doomed. California's doomed, and so on. Europe is doomed under those conditions. So I don't know. Do you stay and fight, or do you flee? That's a great question everybody's asking ourselves, and that's the fundamental difficulty of this generation. But the fact is that you're not even safe in Florida. If everything falls apart, if we experience a second wave of inflation, which we might, not even Florida is going to be safe. So I'm inclined to say stay and fight.
What if the theft wasn't a byproduct, but the plan all along? That's the question you have to ask when you follow the money, track the policies, and look at the world that's been built over the last 5 years. Because this wasn't just monetary easing gone wrong. It was debasement by design. A deliberate strategy to inflate away debts, destroy the value of cash, and shift wealth into harder, less accessible assets, ones already owned by the elites. Look at the evidence. Global M2, the broadest measure of money supply, has exploded by over 28% since 2020. The US alone increased its M2 supply by 40% at the peak, flooding the system with dollars while productivity gains failed to keep up. And what happened next? Wages stagnated, prices soared. The dollar lost 12% of its value against other currencies. And the people who created the problem? They bought farmland, rare art, private equity, and precious metals. Anything but the currency they were debasing. At the same time, the BRICS nations accelerated their push to break free from the dollar system altogether. De-dollarization talks led to record levels of gold and silver buying by central banks, especially in countries that see the writing on the wall. Meanwhile, the US is sitting on a debt-to-GDP ratio north of 130%, fiscal deficits exceeding 6% of GDP, and an entitlement crisis looming like a hurricane on the horizon. The politicians say this is sustainable. The markets say otherwise. But here's the catch. This wasn't a mistake. It was a feature of the new financial order. You print, you inflate, you default through devaluation, and you let the middle class eat the cost. It's happened before. It's happening again. And this time, the tools of resistance are vanishing. Cash is being digitized. Privacy is being criminalized. And wealth, unless it's physical and off-grid, is becoming harder and harder to protect. That's why silver matters now more than ever. Because when money itself becomes the weapon, your only defense is holding something they can't create with a click or delete with a policy change. Silver isn't just an asset, it's the antidote to engineered collapse.
Right before us, it was the most amazing plot in history. Mostly, I just have an article coming out here in a few minutes that kind of lays out the three big pillars of the plot. The first one was a political consolidation and the attempt to crack down on populist movements in the UK, in Europe, Brazil, and of course the US. So in the US, the intention was to install a military general as the new head of the U.S. government and deprecate Trump, the elected president. This is unfolded in 2020. And we have the general's name. His name is something O'Shaughnessy, General O'Shaughnessy. He was going to be the general manager of the government, military dictatorship. Suddenly I'm realizing that as I'm talking, your readers are thinking, oh, so Tucker's one of these crazy people who believes crazy things. I mean, what I just told you was reported in Newsweek magazine, March 20th, 2020. They laid it all out. The only reason it didn't happen is that Thomas Massie forced everybody to come back to Washington, and for a quorum for a visit on the CARES Act, and that's what subverted the plan. But the guy was already picked out. We were going to have a military dictatorship. That was the plan. By the way, that article in Newsweek magazine was taken down from the website after the inauguration of Trump the second time, so it doesn't exist there anymore. But you can find it on archive.org. So it was. I don't know if you've ever seen the 1964 movie called 7 Days in May, but it's about a plot to unseat the civilian government. That's exactly what unfolded in March 2020. That was the plan. So, and meanwhile, Bolsonaro is still languishing in jail in the UK. Boris Johnson, who led the Brexit effort, is a clown in the UK. I mean, he was utterly wrecked by the COVID experience. They're still trying to tamp down populist movements in France, Spain, other places, and a guy like in Orban in Hungary is considered to be like this rogue regime or whatever. He's a surviving populist. The new government in Poland is hated because they have excluded the immigrants and so on. So there was a political motivation. So that's point one. The second,
There's a supply crisis brewing in the silver market, and it's not some distant threat. It's happening right now, and it's tightening fast. Global mine production for 2025 came in flat at around 830 million ounces, even as demand surged across industrial and investment sectors. That's a structural deficit of up to 200 million ounces every single year. And here's the problem. This isn't a short-term dip. It's a long-term chokehold on supply that's getting worse, not better. Why? Because the silver miners can't keep up. Grade declines, environmental restrictions, and years of underinvestment have gutted the industry's ability to ramp production. Strikes in Peru wiped out 10 million ounces in Q2 alone. And the new projects that could ease the squeeze? Most are delayed until at least 2027. Recycling is ticking up, sure, but it only covers about 20% of demand. The rest needs to come from the ground, and the ground isn't cooperating. Meanwhile, the demand side isn't slowing down. Investment demand is rising. Industrial usage is hitting records. But production? It's stuck. And this mismatch is what sets the stage for an explosive repricing. It's simple economics. When demand rises and supply can't respond, price becomes the only release valve. And silver, already trading around $33.50 per ounce, is just beginning to reflect that reality. Analysts are projecting $38, $40, even higher, especially if inflation kicks back up and rate cuts resume. But here's where it gets critical. The elites who engineered the monetary collapse are now accelerating the scarcity of the one metal that threatens their system. Every ounce of silver bought by a solar farm, an EV maker, or an AI data center is an ounce that never hits the open market. And as supply tightens, the ability to acquire physical silver at any price becomes the real challenge, not just affording it. This isn't about price forecasts anymore. This is about availability. Because when the public wakes up to silver's role in wealth preservation, and the institutions move to secure what's left, you'll either already have it, or you'll be fighting for scraps.
yeah, I mean, you buy a house for $100,000 now, it's worth $1 million. I mean, are you richer? Well, I mean, your assets have grown, but you don't have any more liquid wealth. All you can do with your new assets is borrow, right? That's the only possible advantage. is it gives you more collateral for getting more levered up. I mean, that's not the same thing as prosperity. You've not actually realized any gains at all. So the precedent this establishes, and we have to roll back a few years. Remember, the Biden administration was going to put this in their budget bill.
Wealth tax. Yep.
Yeah, that So if I buy a fancy rug at a thrift store, that's for $50, that turns out to be a rare handmade rug that's worth $50,000. A revaluation of that could technically expose you to a tax liability. I mean, it's unbelievable, and it's true for paintings or stocks. And of course, what they were really going after here was the holders of Bitcoin and other crypto assets, so that if you owned 1,000 Bitcoin in 2010, you have $1,000, but now you've got whatever that comes to, 10 million or whatever, 100 billion. All right. So, but from your point of view, you're just staring at some digital stuff on your wallet, on your phone. That's not actual wealth. So it doesn't make any sense to tax something that is unrealized. Well, I don't even think you should tax realized gains, but unrealized gains, I mean, that is a prescription. That's just socialism, really. So in that way, property taxes are kind of a communist experiment. Yeah, it began with a kind of, let's all support the kids. But actually, the theoretical basis of it leads to the abolition of property rights themselves, which, as we know, is one of the dreams of Karl Marx, as he clearly made.
What most people don't realize is that the very industries fueling this digital and medical revolution, the same ones driving profits for the elites, are the biggest consumers of silver. The irony is staggering. The pharmaceutical and tech sectors, key players in the global wealth transfer, are now triggering a supply crunch in the very metal that could protect the average investor from financial ruin. In 2025 alone, industrial fabrication consumed an estimated 580 million ounces of silver, more than half of total demand. And the majority of that? It's being swallowed by tech. Start with solar. Solar installations skyrocketed 30% year over year, eating up over 200 million ounces of silver. With global mandates to reach net zero emissions by 2035, that number is only going to explode. And unlike other metals, silver is irreplaceable in photovoltaic cells. No silver, no solar boom. Then there's electric vehicles. EV sales jumped 25% in 2025, with each car using between 1 and 2 ounces of silver. And that's just the average. As vehicles get smarter and more connected, the silver load goes up. But the real wild card is artificial intelligence and medical tech. AI data centers are expanding at breakneck speed, requiring high-conductivity silver for wiring, cooling, and processing. Meanwhile, the pharmaceutical sector, already swimming in profit from the pandemic era, is quietly ramping up silver use for sterilization, diagnostics, and cutting-edge drug delivery systems. This is demand that doesn't blink. It doesn't panic sell. It just grows. And that's the trap. Because while most investors are focused on short-term price charts, the fundamentals are being reshaped by forces far outside traditional finance. These aren't silver bugs buying bars for the end of the world. These are corporations embedding silver into the backbone of the 21st century economy, making it scarcer with every passing quarter. And as industrial demand crowds out investment supply, the window for the average person to buy physical silver is narrowing fast. By the time the headlines catch up, silver won't be a financial asset. It'll be an industrial battlefield. And the people still stuck in fiat, they won't even know what hit them.
And that, the other thing that is great about the pharmaceutical piece of it is that the depression and sadness that came out of the lockdowns, people turned to weed and liquor, but then also to psych meds, which you could suddenly get with a 5-minute Zoom call with telemed, which is all liberalized during the period. So, doc, I'm not feeling good. Well, have you tried Zithropro or whatever the thing is, and Lexapro? Right? What does it do? Well, it sedates you. Okay. Yeah, I'll take that. That'll be good. So we've got a population deeply damaged in their mental and physical health, making everybody ever more dependent. Oh, here's the other thing. I think all the data indicates that the average person put on 20 pounds during lockdowns. Well, now everybody's fat. Well, don't worry. Here's a pill for that. So, these Ozempic and so on all become the largest pharmaceutical companies in the world, second only to the mRNA companies Moderna and Pfizer and Merck and so on. So the pharmaceuticals are running every government. And of the three pieces, political, technological, and pharmaceutical, I would say that pharmaceutical is the most powerful of the three. But it was the coming together of those three interest groups that pillaged the world. Between 25 and 40% of all existing wealth was stolen over 5 years, and our lives disrupted, our communities wrecked, and our demographics utterly scrambled. So that's where we are in 2025. We've got a gigantic mess on our hands. It's going to take more than one white knight in one country to fix it. Every country in the world is suffering right now, an unspeakable amount. It's a genuine crisis for the whole of civilization.
If you're wondering where the pressure valve will finally blow, look no further than COMEX. This is the heart of the global silver paper game, where futures contracts outnumber physical ounces by staggering multiples. And right now, that paper illusion is fraying at the edges. COMEX silver inventories have fallen to just 290 million ounces as of October 2025, down 5% year to date. Deliveries are up 15%, signaling growing demand for actual metal, not just promises. Meanwhile, managed money net longs are climbing, with hedge funds quietly repositioning for something big. And here's the catch. This isn't just positioning. It's a sign of physical tightness. As inflation fears return and trust in fiat continues to erode, more investors are demanding delivery. Not exposure, not leverage, delivery. The moment enough players call for physical redemption that COMEX can't fulfill, the entire paper pyramid collapses. We're not talking about a slight premium jump. We're talking about a break in the pricing mechanism itself. The day COMEX can't deliver is the day silver breaks free. But that day is closer than most think. With industrial demand surging, mine supply stagnant, and retail investors pulling physical off the market, every new contract issued becomes a risk. And if the institutions sense blood in the water, the short squeeze that's been whispered about for years could finally ignite. It happened in gold in the 1960s. It happened in silver in 1980. And all the ingredients are in place for it to happen again. Except this time, it won't be retail traders pushing the price. It'll be the system itself collapsing under the weight of its own deception. This is the moment where paper illusions meet physical reality, where supply chains meet investor awakening. And once it starts, it won't stop. The paper price will chase the physical premium like a dog chasing a car, until both lose control. That's the tipping point, and if you're not holding silver before it hits, you won't be getting it after.
The one was this digital reset. The tech crowd, this new group of extremely well-to-do, highly intelligent oligarchs that are running our technologies now are untamed by any kind of tradition or manners or religion or anything like that. And a myth began to grow up among them that we're living amidst the third great industrial evolution. The first one being 18th century with the rise of factory culture and division of labor and all that kind of stuff. The second one being electricity and commercialization of steel and communications in the late 19th century. And then now it's the third one. But each one of those periods required a kind of violent act to kick them forward, because humanity is too stupid to adopt their great new technologies. We're too slow. and that's holding us back. So we had all the wars of the 18th century to give us the Industrial Revolution. We had the Civil War in the U.S. to give us the Second Industrial Revolution, and the overthrow of monarchies in Europe and so on and so on. So we need some similarly globally violent action to kick off the consolidation of the digital gains. And that's what happened. I mean, the very first and most compelling article that came out about the need to flatten the curve came from a guy named Thomas Puello, who had never written anything epidemiological in his life. The article was viewed tens of millions of times in every language. And it came out in, I gotta say, early March 2020. And he's the owner of an online learning platform. So the article is a workshop for him. He dumps it out there. And suddenly in your inbox mysteriously arrives this article with charts on how to flatten the curve. You're like, oh, that's really interesting. And then all the money we got, we were invited to go shop on Amazon for our digital products. So you better upgrade your iPhone. You better get a new laptop. You got to try out Zoom. It's pretty cool to Zoom with your friends. And then after all that hell ended, suddenly we've got AI to replace our communities and our friendships. So that was the second part of it. It's technological violence in the name of technological upgrade. And the third part was pharmaceutical. They wanted to try out this new modified mRNA platform to replace the human immune system with genetic therapeutics. And they couldn't get it through regular means. They've been trying for 30 years. They couldn't get it approved because it's deeply dangerous and poisonous, essentially. And it also doesn't work. But they, after 30 years of investment and study, they really wanted to try it out. So they cobbled together this emergency conditions to get themselves not only authorization to use it, but then indemnification liability against any kind of damages they caused. And now we're at the...
While the world fixates on gold, the real story, the one the elites hope you never notice, is silver's explosive potential hidden in plain sight. And it all starts with the gold-silver ratio. Right now, that ratio sits at 92:1. Historically, it averages closer to 60. And during true monetary resets, it collapses. In 1980, when silver surged past $49 an ounce, the ratio dropped below 20. In 2011, as silver rocketed from $9 to $48, the ratio plunged again. Why does this matter now? Because the current spread isn't just wide, it's screaming undervaluation. A ratio this extreme means one of two things. Either gold is massively overvalued or silver is criminally underpriced. And when you account for silver's surging industrial demand, collapsing mine supply, and escalating geopolitical stress, the answer is clear. Silver isn't just behind, it's coiled like a spring. And as trust in fiat continues to erode, history tells us that silver doesn't just catch up, it overshoots. Violently. The gold-silver ratio isn't just a technical metric, it's a signal. A countdown to a reversion that is played out in every single precious metals bull market. TD Securities is already forecasting a compression to 80 by 2026, but that's conservative. Because when sentiment shifts and panic sets in, the ratio doesn't move gradually, it snaps. And when it does, silver doesn't inch higher, it erupts. Add to that the recent central bank moves, 50 metric tons of silver added to reserves this year alone, and you have institutional validation that the ratio is due to collapse. These are the same banks that were front-running gold years ago. Now they're buying silver, quietly, methodically, because they know what's coming. And when silver starts its move, it won't wait for headlines or analysts. It'll just go. This is your window, before the ratio compresses, before the premium explodes, before the market realizes that silver isn't just lagging, it's leading the next leg of the monetary rebellion. They told you the system was stable. They told you inflation was transitory, that your savings were safe, that the worst was behind us. But they lied. The truth is that 25 to 40% of global wealth has already been vaporized, and not by accident, but by design. Central banks printed, politicians spent, tech harvested, pharma locked you down. And while the world panicked, they orchestrated the greatest economic heist in modern history. But here's what they didn't see coming. Silver. Because silver isn't just money, it's defiance. It's the one asset outside their control, immune to dilution, immune to censorship, immune to the digital trap they're building around us. And as inflation threatens to surge again, as mine supply falls short, as industrial demand continues to explode, silver isn't just hedging against collapse, it's exposing it. This isn't a market cycle. This is the final battle for financial sovereignty. You won't get a second warning. When the paper-silver game collapses, when the COMEX cracks, when the gold-silver ratio snaps back to reality, it will be too late. You'll either already be holding real metal, or you'll be watching it disappear. So don't wait for the media to catch up. Don't wait for permission to protect your future. The window is open, but it won't stay open for long. Subscribe now to stay ahead of the storm. And remember, this is not financial advice. Speak to a professional before making any investment decisions.